What's going on, guys? Thank you for tuning in to another episode of Hustle with Julian. Today, I'm going to be going over credit card interest. Have you ever had a credit card where you carried a balance on it and you're making the minimal payments, and 6, 7, 8 months down the line, you're looking at the balance due like, what the fuck? What, all this money I spent on this card, where'd it go? I'm going to show you guys a little bit more in depth about that today. First things first, I'd like to say, if you have a credit card, obviously try not to carry a balance on it. You don't want to end up in that type of situation. If it's a zero interest card for the first 12 months, it doesn't matter if you carry a balance. But overall, generally speaking, these credit card interest rates are a lot higher than they seem. And it can just dig a deep, deep hole for you. So obviously try to not carry a balance if you can, but we all end up in tough situations and sometimes we're forced to carry a balance. But I'm going to try to help explain today a little about how the interest is really so much more than it seems like it is. So let's get into it. Credit card minimal payment calculator. Now, this is something I Googled and I just happened to come across, and it made me think like, wow, this is really amazing. Because when you get a credit card, you're thinking like, oh, this thing has, rates typically like 10, 15, maybe 20% on the high end. You're thinking like, oh yeah, 12%, 15%. It's not that much money, right? I mean, it's not that much interest. Like, they can't be charging me that much for money. But the way it works, it's not like a flat fee of 12% of, $1,000, which would be $120, right? Over a yearly basis. It doesn't work like that. To be honest, I'm not even sure exactly how it works, but I just wanted to show you guys how much more it really is than that. It's not like up 12% of whatever you borrow. It's a lot more than that. And let me explain a little bit more, because I don't completely understand it, like I said, but this calculator will help show you guys what I'm talking about. So let's say, for example, you take out $10,000, right? And if you have a 0% interest rate, so typical minimal payments is going to be like around 2%. I think American Express has like 1%. I think it can go up to 4%, but I think typical is around 2%. But if you have 2% of $10,000 balance borrowed, it's $200, right? And you can pay that off in whatever amount. 178 months, $10,000, you pay zero interest, obviously, right? At 0%. But let's say 10%, right? Now, when you think 10% of it, 10,000 is $1,000, right? But watch how quickly this adds up to so much more than that. Still at 2%, your monthly payments are still the same, minimal payment at $200, but look at your total payments here. It adds up to $16,831, almost twice the amount that you borrowed, which is a huge, huge difference. And if you look at the report here, this is where it gets really in depth, right? So your first payment, these are the months here. This is the payment, this is the interest, this is the principal, and this is the balance. So your first payment, you pay $200 minimal payment. Your interest is $83. The principal is only $116. The principal is what goes towards paying off your balance. So out of a $200 payment, almost half of that payment is interest only. So you might make, $1,000 in payments over the course of 5 months, right? You make $1,000 in payments, but when you go to check the balance, you still owe damn near $9,500. So basically like half of your money went towards interest. And this is how it really starts to add up, guys. And this is when you start to really dig yourself a hole, because you're paying a lot of freaking money. You're paying a lot of money. Only half of that is actually going towards the balance that you owe. And it just keeps you in this loophole of paying, and taking a very long time, way longer than it should, to shoot down your balance that you borrowed. And this is only at a 10% rate. Keep in mind, there's cards that are like 15, 20%. So, or 18%, somewhere in that range. So 10% isn't that bad. Honestly, I've seen a lot worse than that. And it just goes to show how much of a difference it makes. And let's just, for the hell of it, let's do a 15%. Let's see what it's like at 15%, right? Because you've seen right there, it's almost half of your minimal payment. Let's do something high. Let's do like 18%. That's pretty damn high, right? So minimum payment's still the same, but your total payments, right? Keep in mind, we just did 10% credit card rate interest. Now we're doing 18%, so 8% more, a little less than double. Your total payments went from $16,000 to $35,000. That's absolutely fucking nuts.
Holy shit.
And one payment of $200, you pay $150 interest, and only $50 goes towards your principal, which means you would be down to $9,950 after the first month payment. After making $1,000 in payments on the 5th month, you would only have reduced your balance by about $250 for making $1,000 in payments. And this just shows the significance, guys, of how much more that seemingly small interest rate really adds up. Like when I see 18% for a credit card, I'm like, okay, not a big deal, 18%. I mean, it's not that much, right? Because I'm thinking in terms like, 18% of the balance borrowed. So, $1,800 if I take a year to pay this off or whatever. I don't say that like I actually think in those exact terms, but roughly you're thinking like, oh yeah, I'm going to pay this off way sooner, than they expect me to. So I'm not going to pay all that interest, right? It's only 18%. It's not a big deal. It only adds up if you hold on to it for a long time, but no, it adds up from the first payment that you make. So keep this in mind, guys. I think this method, just being exposed to this type of information, can really just open your mind up to how quickly credit card debt can add up. And I hope this helps you guys, and helps you stay away from letting that credit card debt carry over into the months and months and months. And with something like this, a couple solutions that I can provide for you guys is, let's say you have credit card debt, right? And you've been carrying it over. You have a balance that's carrying over every month. You don't have the money liquid to pay off those credit cards. It would put you in a hard position that you can't afford to do right now. Something you could do is, if you have a 0% credit card, or you can get approved for a 0% credit card, you can do what's called a balance transfer. It doesn't work on all cards. It's only certain cards. So make sure you check that information out before applying for anything new, right? But you can take the balance from one of your high interest credit cards and then transfer that over to your 0% credit card. And that way, even though you have to carry over the balance, it's fine, because every payment that you make at 0% is going 100% towards the principal balance that you owe. So that's one solution. That's balance transfers. Another solution would be getting a personal loan. And this, you really have to look into where you're getting this loan approved, because there is loan sharks out there that offer crazy high interest rates just like this, if not worse. So you really have to get a good interest rate on a personal loan, but sometimes it can work out better to pay your credit cards off that way. So basically with the personal loan, they'll pay off all your credit cards, and then you just owe them. You, instead of making 5 payments on 5 different credit cards, you just make 1 payment to them. And if it's lower interest than all those 5 credit cards combined, then that can be beneficial for you, right? And yeah, guys, that pretty much sums it up. I hope this teaches you something about credit cards. I hope you learned something from this. I hope this inspired you and kind of got your gears rolling with how important this stuff is and how it can add up so quickly. And maybe you can educate somebody else on this type of information to kind of help them out, family members, friends, relatives, things like that. So thank you guys so much for watching. I appreciate you guys for watching. Don't forget to hit that like, subscribe, notification bell. Check out the links down below.